In this episode, my friend Harry sits down with us and he shares with us how he stumbled upon the book, Becoming Your Own Banker, and how he got started with the sole purpose of not ever having to pay banks interest again. And he's really doing it. And this is a really good episode that you won't want to miss. Thanks for listening.
And I get why people have term policies. And I think to a certain extent, when you're younger, I guess those can make sense.
Absolutely.
But
yes.
I also feel like if you're going to set aside $50 or $100 a month for a term policy, why not put it in something that you're going to have for the rest of your life that can be a generational, place for you to have wealth.
Then you could even use term riders on those things too. It's like when you think about, I love that you thought through that and even brought it up, mentioned it. It's like they're in essence paying themselves back. Well, actually, y'all have made the agreement. They're paying you. You're paying the loan back to the life insurance company. But all that net death benefit is going to accrue to them in a tax-free basis. So the more they pay, right, an additional premium, an additional interest, like if policy loans are 5, and you don't have to get into that game, but I'm just saying that if I borrow money at 5 from the life insurance company, I'm either going to repay it at 5 or higher, and it's always been higher. Right?
Yeah.
So that then is additional premium. That's where I'm getting the more. But the death benefit is increasing, and however it's done mechanically within the family that you control and y'all control.
Exactly.
That net death benefit is going to go to her.
Yeah.
Right. And I don't want to jump over the fact. I hope I can. You're also a relatively new grandfather.
Yeah.
Right? Can I say that?
Yeah. LZ is 15 months old now. So
we're talking about 1, 2, the third generation.
Yeah.
And you didn't have to call a bank to say, hey, I just repaid that loan. Can I get another loan?
It's magical.
There's a lot there. And then too, just in this conversation, y'all have repaired and improved your home.
Yep.
Cost a lot of money. Right. What doesn't cost a lot of money today is a fair question I have. You financed an automobile.
Yep.
Right. And you had a hand in paying for a wedding.
Yeah. I mean, I'll go through the list.
Oh, wow.
So it's
okay.
The wedding was the first big ticket item that we were able to fund with policies. And since that point, we've financed my daughter's car is a 4th vehicle that we've financed through the policies, 2 surgeries on top of that, and then the construction stuff that we've done on the house this past year. And I'll say this, I've taken far more out in policy loans than I have put into the policy, and I still have cash value available. And life, unfortunately, over the last year threw a lot of things our way. Thank goodness we had the policy loans to get us through this time period, because I know it's, life is full of ups and downs. And fortunately, we got through this one, and we'll get those loans paid down and have that cash value paid off. To me, if I can pay all the policy loans off in the next, say, 1.5 to 2 years, I'm going to be at a point where I will be at choice whether I want to pay my mortgage off entirely.
Wow.
With the cash value of my policies. And to me, that's crazy. And I think then you start having conversations with people that bring the rate of return conversation into effect. And we refinanced kind of at the very bottom of that market. So our interest rate's like 2 5/8 or something stupid, right? And I think a lot of people would say, well, just hang on to that money and use your money to invest, which I'll have a conversation with smarter people than me when I get to that point, right? Mm-hmm. But I also look at it like this. If you extrapolate a mortgage out for its entire term, there's a lot of interest going to the mortgage company. Even if it's just a little over 2.5%, I want that interest. And really foundationally, that's how I look at it. If I'm paying interest to anybody, I want to pay that off so that even if it's a small amount, that is recaptured by me first. And then I can build back up to starting to invest if that's the case.
And then, Yeah. And then there'll be other things in the unknown future that are good. They don't, when life happens, it's not always bad, right? The grandbaby's not bad. The wedding wasn't bad. Yep. The opportunity to improve, your residence the way you want is not bad. It might be an inconvenient timing. Yep. There's no doubt about that. But it's like that is absolutely a rate versus volume conversation.
Yes.
Yeah, the rate's 2%, but what's the volume of interest that is going away, right? And then by that time, now we're going a couple of years into the future, you would be into the ownership and really the management. You'd be the bank owner, the banker, and the lender, all the hats that you're wearing. It's like you didn't do this without discipline.
Yeah.
Right. So if you did, and I can make a beautiful case either way to pay a mortgage off or not, right? Yep. It depends on the individual and the individual circumstances, their timeline, what they want to do, what makes the most sense for them. You can make a beautiful case on either side or on both sides. If you did not get here because of a lack of discipline. And nothing that we've said has been easy. Easy's not come out of my mouth or yours. It's been difficult, challenging, thinking through it. And then the general pushback that you get when you're excitingly sharing this idea, concept, ability with other people, is like they don't perceive you as the smartest guy in the room, right? Most of the time, right? But I don't know how long you've had your home. I would assume a long time.
About 12 years now.
Okay. I bet you haven't missed any mortgage payments.
No.
12 years.
Yeah.
All right. So you've got discipline using somebody else's money, right? And they control it.
Yeah.
You can go pay your mortgage off tomorrow and then go collateralize it, and they're going to say, oh, yeah, we just need to complete another application, right?
Exactly.
And so if you have that discipline, would you, and I get the human factor, which is, the biggest problems, the human problems that Nelson discusses in Becoming Your Own Banker, the book. If you were to do that, pay your mortgage off through policy loans, the loan interest rate at the life insurance company is going to be 5, 5.25, 5.5. Yep. You're paying off a 2, 2.25, 2.5% loan. Every financial guru, I know it's a broad brush, but it's a big canvas. So the majority of the financial gurus are going to tell you you're crazy.
Yeah.
Right. And the rate, but the volume. I mean, can you even go get a mortgage today under $1,000, $1,500 a month? I don't know with all the.
I mean, for me, it's as simple as this. If I'm having that conversation with a finance guru, I would have to say, but you don't understand. Yeah. I'm the bank.
Yeah.
Because that's the only way you can explain it. Right? It doesn't make sense any other way. So it's like the sooner you can be the bank, where you never give anybody any interest. Like for me, that's the place that I want to get to.
Yep.
So
I love it.
Yeah.
Because I did that early. I've done this with the Becoming Your Own Banker, the Infinite Banking Concept for 21, a long time, 21, 22 years, somewhere around there, right?
I mean, anybody that's been in this game that owns policies for 4 or 5 years, here's somebody who's been in it 20 years and goes, oh man, I can't wait.
And it's the volume. Let's just say you're paying $1,000 a month in mortgage, just to get to a round number for me. That's $12,000 in cash flow, right? That's a volume. But even if you look at an interest, a low interest on a mortgage, right? Look at the volume of interest that is going away forever. It's Einbahnstraße. It will never return.
Yep.
And the only way it returns, the equivalent of that interest, right? And it really is the equivalent, right? So you're recapturing the equivalent of that interest that's going away. Well, that's kind of broad. Why do you say equivalent? Because you're actually paying the life insurance company an interest rate, and it could be higher than what you're, paying the third-party lender. But even that is a finite point in time. You can't go get a 2.5% loan today.
It's impossible.
And so this idea of arbitrage, is cyclical throughout the business cycle that none of us control, but we all live through them if we live long enough.
Yeah. I think the other thing to keep in mind is the policy's interest rate is always lagging. And so like when everybody else is now paying probably 6-7% and I'm paying 5.5%, like, so let's talk interest rates then.
Yeah.
Right. And it's always easy to take a specific example and twist it to your advantage.
Yes.
Right. And over time, when one asset is only ever going up with never a downturn, I don't know how you fight that logic.
Yeah, I don't either. Other than, the human characteristics of fear and greed in the marketplace.
Yep.
I'm afraid I'm going to miss out, or I'm greedy and I got to get, so I'm not, I suffer personally from FOMO, right?
Yeah.
And have most all of my life. And at least I'm aware of it, and so I can address it, which I try to do, but I'm human. So I don't feel like I'm greedy, but I feel like I suffer from FOMO. Oh, look at what Bitcoin's doing.
Yeah.
Right. Oh, look at what the real estate market's doing. Or, oh, look at, what I could do with the HELOC or whatever it is.
Yeah.
That's the only way that you can overcome the logic, in my humble opinion, is with some external point, whether it's interest rates or whatever it is, that you can justify, right? Yeah. It's like, well, I'm not going to do that because I could go earn this rate of return. But if we go back to the loans just for a minute, and I'm not asking, but that's a lot of money. That's a lot of money. 4 cars, a wedding, surgeries, and that's a lot of money.
It's a lot.
Right. And with a qualified plan, which is where most people are encouraged to put their money, and I'm not disparaging qualified plans, IRAs, 401ks, and I understand Roth IRAs. And when you think about that, they all have their place. All right? I'm not disparaging any one of them or anyone who promotes them or uses them. I own them. All right. You can only borrow $50,000. That's the limit from a qualified plan. And you cannot borrow against your IRA. And I understand self-directed IRAs and all the cost and the arm length dealing regulate. I don't know everything, but I understand those. Right. $50,000 or 50% of the value of your qualified plan. Yeah. That's the limit on a loan. And then it's a 5-year payback, and they're setting the interest rates. And then every plan document dictates how many loans you can take. Does there have to be a time period between loans?
Yeah.
It's like, if I borrow $25,000 because I needed to finance this, can I go borrow another $25,000? Well, you got to go check the plan document.
Yeah.
And it's just an increase in the loan, and you're going to pay that back within. I mean, when you really look at how basic, and you don't have to be a financial expert. I just don't believe that. And I don't believe you have to be a life insurance expert either. But when you just back up enough to see kind of what's going on, and when you live it, it's like calling, you just paid a loan, and the lender's like, yeah, sure, just fill out another application. Babe, pull the other one up that you had 8 months ago, Yeah. It kind of changes your perspective.
And let's say you think that process is easy and you can get access to 50% of this huge stash that you've built. God bless you, right? But that cash stops growing.
Yeah.
And that's the other thing for me, why I'm not scared to take a policy loan because I'm not damaging the growth of the policy. Right? Over time, I'll pay that back, and that policy will continue to do what the policy is in place to do.
I love that.
Yeah.
And if you choose or have to rework your loan repayment schedule, you can.
Exactly. They don't care if I pay it all off tomorrow or if I want to take 10 years to pay it off. you know? And obviously, the book is so great about explaining things in very simplistic ways that make you understand why it's important to be an honest banker.
Yeah.
But at least you have the flexibility.
Yeah.
You know, and I think that's the beautiful thing. Everybody goes through ups and downs and runs into months or seasons of life in which they struggle a little bit. And, Bridget and I, over the last 5 years or so, have been fortunate enough to do well. But who knows, you know?
Yeah.
And thank goodness we've had access to these policies, because everything that we have financed through our policies would have cost us had we gone through traditional means, we'd be broke.
Well, and not every loan is the introductory offer of 0%.
Yep.
And they're limited when they are offered. Most credit cards that I see today are 21 to 29%.
That's crazy.
The HELOCs that I see for accredited investors, is anywhere from 8 to 11%. And I'm like, if I didn't know these professionals, I wouldn't believe them.
Yeah.
But, the last, I don't know how, it's probably 3 or 4 years ago, I had some young, new banker, and he's like, oh, well, here, just get this line of credit. And I said, sure, and what would be your limit? I don't remember, it was 50,000, whatever. I'm like, well, he didn't ever want to talk about the interest rate, which was fine. But I did ask him finally, I'm like, well, what's the interest rate on that? And we did open it, just so we went through the process, never used it, could use it. It's closed now, but it was 10%. 10%.
And that was years ago.
Yes. and I know within the last 12 months, I've got clients that have, that they use, lines of credit for various things. And I understand you can go get a HELOC at 5 or 5.5 too. That's out. I hear about them. I'm sure they're available. The people that I know that use them, they're every bit of 7, 8, 9, 10, and 11%.
Yeah.
And so, but your policy loans weren't that way. So if you had to go through all that without these, you said y'all might have been broke, but you would have absolutely, if you didn't go broke, you'd have been paying a lot more interest. It's a rate.
Yes.
And then the volume is always greater than the rate.
Exactly.
All right. That's pretty dang powerful. So I'd like to ask you about, I suffer and have suffered from FOMO. Have you ever suffered from that? When you go online and I think I know the answer, and I shouldn't ask questions I know the answer to, but I don't know the whole answer. I just have suspicions, right? When you get off into social media, TikTok, Facebook, YouTube, and you hear about this idea of becoming your own banker, everybody's got an exotic, not everybody, I know that's too broad, that you hear a lot of exotic presentations and possibilities. Would you?
Well, I enjoy watching those because I like to see how other people are twisting what I consider the Bible, right? It's fascinating to watch people twist in other finance methods with the policy loans, et cetera. And I'm sure it works for some people. Mm-hmm. I just feel like the book's very foundational. It's very simplistic. And if you can stick to the core tenets of the book, you'll come out ahead. I've watched so many different, whole life-based investment strategies, and a lot of them have to do with real estate. And I'm sure there are guys that do very well with that, and maybe eventually I'll get into that game, right? But I think it's pretty simple to me. It's stick with the basics until you're not paying interest to anybody. And then when you're at choice and your monthly expenses have been cut by probably 70%, you can do whatever the heck you want. I think that's that's the beautiful thing for me.
I don't want to interrupt. I just love that, because that's here. I don't want to interrupt you, but I am. That's the me suffering from FOMO, and here I'm doing this, whatever it is I'm doing, I either wanted to do it or needed to do it or have to do it. And then I hear these, no disparagement, but beautiful presentation, and I've said it, cash flowing, appreciating, cash flowing assets. Yep. Yeah, that's the kind of asset that we all want to own, and sometimes that has made me feel, FOMO's real. But then I look at what I've done and what we're doing, and I'm like, no, my plate's pretty full here. I'm not missing anything.
Yeah.
So,
I think that's the real trap is, and even watching your show for as many episodes as I have, your clients have a vast, difference in some people's level of wealth and what they're doing with their policy loans. And somebody like me who is relatively new to it, who is using it for foundational stuff like just not paying interest to anybody else except myself. And it's easy to feel like you're way behind. And especially once you get in your 50s and you're just starting this, it's like, well, when do you want to start? Wouldn't you rather start as soon as possible and pay as much as you possibly can afford to pay to get to where these other people are talking about? So it's an easy trap to fall into, but I think over the time, I finally realized, hey, as long as I am playing the game the way I originally intended, touching base with people like yourself, like the recent call I made, just saying, James, am I crazy? Here's what I'm thinking about doing. Am I stupid or what, right? But I think that's why you partner with people like you, because you can have those conversations occasionally and you can make sure that the steps you're taking are the right ones. And as long as you're taking the right ones, you may feel like you're a little behind at times, but I've always gotten back out.
Yeah.
And it's been with the amount of loans that I've taken, the amount of time it has taken me to rebuild cash value that affords me a car or whatever else I would like to do. It's really a short time period now. So that's the exciting part.
Yeah. I just love that, I do. And my point, a fundamental point and belief and a knowing that I have is like, you don't have to be an entrepreneur. You don't have to be in business, a business owner. You don't have to be an investor, right? You don't, because every household has its own economy.
Yeah.
Every household. And we can't even control the business cycle in our businesses, right? Much less we can't even control the business, I will say a business cycle in our homes.
Yeah.
Right? I mean, you can't control when your daughter and your son-in-law want to have a baby or want to get married or when the car needs to be replaced or when the foundation springs a leak.
Yeah.
It's and so this idea that you have to be something more than what you are or better in whatever terms that may be than what you are or what you're doing is complete, total, utter hogwash.
Yeah.
It's like, and I've said it before, and I learned it from Matt Nokas many years ago, a Greek gentleman. And then if you get into it, it's crystal clear. The etymology of the word economics is economia, is order in the home. I love that.
Yeah.
So
I failed at economics, by the way.
I am not an academic, so it took Nelson Nash and my previous, experience in the financial world and whatever, but I didn't really understand economics until I met Nelson.
Yeah.
You get all kinds of licenses and education and blah, blah, blah. But, really, I didn't really understand economics until I met Nelson Nash.
Yeah. I felt like I had it all backwards when I was trying to take the classes. I literally showed up for the first test and failed. I was like, I thought this stuff made sense to me. But I think for a lot of people, I think probably the majority of people, economics is something that is more easily learned through experience in living.
Human action.
Yeah. So,
oh my gosh.
Yeah. So that, I've read a lot of the books that, I've read Ryan's book when he released it. And, a lot of that stuff is like, Ryan's a really smart guy, right?
Yeah.
And that book is not the most easily digestible book, but if you make it through, you're going to pick a little something up, right?
Yeah, absolutely.
You read it again, you're going to pick another thing up. Yeah. And you keep living and making the most of your policies and make sure you're just following the path. Like, get a little smarter.
I love it. It's like Ryan and I were talking the other day, and, I personally like to have like material available to clients, client-only access, just so you might feel like you're getting something or you have access to something that other people don't. I don't know whether that's right, wrong, or indifferent. You have access to me and everybody in the big wide world doesn't. So, but it's the Oxford method of education. Here we have a lecture, right, and maybe some materials, some visuals, some writing, what have you. And then there's conversation.
Yeah.
And that makes sense to me.
Yeah.
Yeah. All right. Well, what else, Harry? This is as good as I thought it would be, sir.
No,
just because, you're like a very likable guy, very intelligent, and you're actually doing it, and you're real. It's not.
Well, what I appreciate about what you guys have done through the podcast and how you practice your business is you do make yourselves available, right? You hold events most years. Those events, like I've met complete strangers every single year and have had just one of the best days I've had in a long time, just meeting somebody new. Yeah. And they're all good people. They're all trying to do the right things for themselves and their family. And for me, like, I just want to be around more people like that.
Yeah.
Right. And I think the more you avail yourself to people who are like-minded and have not only their own interests, but the best for others at heart, you're probably heading in a good direction.
Yeah.
So
I totally agree.
Yeah.
Totally agree.
I really appreciate you taking the time and letting me come down here.
Oh, thank you for coming down here. I'm 10 minutes away. You're an hour. I appreciate you. I know you're a busy guy. We kind of before maybe the cameras are turned on, but the restaurant business is not for the faint of heart, especially when you're high end, upscale, Michelin recognized. I mean, it's like that's no joke. That's a lot of work, and then all of the things, including the manpower that it takes to show up consistently day after day. That's a lot.
Yeah, we reached the point where I think now we're just a little over 600 employees. And it's a little daunting, because ultimately those of us who are running those businesses, like we're controlling the livelihoods of all those people. And we want them to have successful lives, Absolutely. Just like we want the business to be successful. And there's a lot of reciprocity in that, right? It's like one of the things that I enjoy most about managing is I just have this foundational belief: if you treat others how you want your staff to treat your guests, you're probably going to have things work out just fine, right? It's the hospitality industry. Why would it change as you go up the ladder?
Yeah, it's more responsibility, more humbling.
Yeah.
There's a lot. Okay, well, thank you for the kind words. I greatly appreciate them. I appreciate you, seriously, for coming down and sharing. This is unpaid. It's like there's no incentive for this man to drive down here and share. So thank you.
Yeah, I'll say this. The time spent like driving down here, having the conversation, which I enjoy, but like the hope is that with each one of these podcasts, because I've watched, I don't know how many you have in total, but it's a lot, right? And I got a decent drive to work. And for anybody who's watching this thinking, God, I don't know, it seems like almost a little too much to think about getting started, just get started. Like, you'll look back after 5 or 6 years and just be amazed at what happens.
Since you said, thank you for saying that too. And there's a couple of points, comments that I want to make. Originally, when I discovered Nelson's But Becoming Your Own Banker, there was, I think, somebody on the radio, it's like an insurance agency that did this. And other than that, I didn't know anyone.
Yeah.
I didn't know anything, and nobody, and I'm in the financial industry for 14 years, writing life insurance. Right. And I'm like, I knew nothing. And so, and then I meet Nelson, changed my life, changed our family's life, changed our clients' lives, changed everything for us. Right. And then we, decided to do a podcast, 4 or 5 years ago, whatever it is. I'm thinking, man, if somebody that is actually doing this, that's not a financial person, would share. If I could have heard that 20 years ago, I think it would have helped me. It probably wouldn't have, I probably needed a lot more help than that. But I just thought, man, that could be so helpful. And I think it has been.
The beauty of what you've been doing by bringing people who are just normal people living their lives on your podcast, not everybody's going to resonate with everybody, but you're going to find a couple that really hit you and inspire you to keep going. And that's the whole point.
Yeah. I forgot what the other point was, but I totally agree with that, because I'll talk to people and they'll mention you and they'll love you, I promise. And somebody will say, well, that's what I heard on this when Harry was talking. And then somebody else say, well, I heard this when Harry was talking. And there'll be two totally different things that the individual heard.
Yeah.
Yeah. I forgot what the other point. It'll probably come to me, So anyway. All right. Well, thank you, Harry.
Thank you, James.
Greatly appreciate it.
I appreciate you.
All right. Perfect. I had fun too.
Awesome. Thank you very much.
Thank you for joining us on the Banking with Life podcast. If you're watching on YouTube, make sure to like and subscribe and click on that little notification bell. Otherwise, join us on Apple Podcasts and Stitcher for weekly content.